Gorgeous. All right, beautiful. I hope everyone is doing good. I hope you're having a wonderful weekend. Just to get started, is there anything anyone wants me to look at today, or should I just run a few analysis? If there's anything you want me to specifically look at, I'm glad to go into that. EuroCAD, okay. GBP/USD, okay. Okay. So AUD. Okay. Beautiful. All right. Let me go and check. Oh wow, this keeps coming in. Okay. Hold on. JPY. Yeah, I think I got that. Beautiful. Thank you very much. So let me grab those and let's start doing some analysis. There's the okay. So let's start with let's go with JPY, Euro, USD, CAD, AU, GBP. Okay, let's see what each one of them have for us on COT. See. Okay, so I'm gonna try to be as straight to the point as possible and maybe not too much explanation because there's quite a few assets that's been called out. So I'm just gonna take it quickly so I don't waste any time. So JPY first, what we can see from the commercial is that they've added 10,000 new positions to the long, right? So what we're looking at basically on a COT report is the commercials and, if they're going long or short. And from what I can see, they've added from the changes of the last report, they've added 10,000 new positions. So JPY is looking long, and this report was on the 12th, so it was last week's report. There's always a week lag in the COT anyway. So let's see Euro. Euro also have added 7,000 new position into it, so Euro is also long. USD is long, but it's not that much. So I'm just gonna put a star next to it. It's just 282 new positions, not that much. CAD, we can't do CAD because they're not going long nor short. So for that reason, CAD is out of the list. But that doesn't mean that we can't trade CAD. Maybe USD, for example, CAD or Euro CAD. Now AUD is quite confusing because they have both long and short in there. So ultimately short, but I'm gonna start that out. Put a star around that. And pounds, there's nothing in pounds right now. They're not going up, no, they're going down. So if I'm not mistaken, that's covered that. So the next thing we have to look at now is the seasonality. So since we already know these four are what we're looking for, so all we just look for is Euro, USD, AED, and JPY. So the first thing is Euro, AED, USD, JPY. Just gonna load all the seasonality for all four and see which one is best aligned for us. And then based on that alignment, we can then check probability and see what we can trade. So currently right now we're here. We're around here. So, and basically what I'm looking for is alignment in all three. So where all three aligns to to push up to, that's where I'm gonna go. So from the 17th today, Sunday, uh, the 15 and 24 years aligned to go long, but the 5 years just aligned for one day and pull back, but ultimately going long. So with the euro, seasonality goes long. Ideally, the best will be 19th, safest, but you can go in, yeah, but you can go in from tomorrow, 18th. Now, keep in mind, if you go in from tomorrow, which is the 18th, right here, there's a possibility the market can actually rally, go up or pull back first and then go up on Tuesday. So to be the safest, I'll actually say from Tuesday. So there's no need to kind of rush. On Monday, if you see, okay, it's going to go in your direction, then you can pop in. But if not, just stay away. Wait till Tuesday. Next one is CAD. Let me see. Exit is actually 21st, right? Then next thing is I'm just checking something, confirming. It's about 3 days straight. So I think I didn't open. I don't even need CAD anyway. So AUD is the next one. Let's look at AUD. So we're currently somewhere around here. So AUD, if we boil it down a little bit, let me take out the 15 and the 6 so I can get the 5 years. 5 years chart on AUD doesn't really look that enticing. It looks more flat type of, chart. Well, maybe next year we'll see it going a little bit more liquid like the past. But what we're trying to look for is maybe we can get a move from the 18th on AUD. It's kind of pulling back. It's kind of falling on the 5 years, but the 15 and 36 years is giving us something different. Saying from tomorrow, we might actually see AUD rally up to the 20th, then most likely consolidate. And when we're looking at the AUD anyways, telling us short, the COT report. So what I'll do is there's a conflict right here because 15 years and 36 years is telling us to go long, or 5 years is telling us to go short on seasonality, but COT is telling us to go short. So I'm going to delete AUD out of that list, and we don't really need AUD right now. Neither do we need CAD. So we don't need GBP also. So the next thing is USD. So we're gonna go USD USD, right?
Boss, we can't hear you again. Oh.
Can you hear me now? Is it better? Apologies. Sound card
Yes,
dropped out. Yeah,
yes.
my sound card drops out. It does that every week with Zoom. It doesn't do that with anything else. It's just Zoom. It does that way. I don't know. Maybe the drivers is not set up correctly. Apologies. Yeah, so I'm going back to analysis. So JPY, let me see. On the 17th right here is today. So tomorrow 18, it's kind of like a confusing chart on JPY. I want to be very, very careful. Um, According to 44 years, we're safe to go long, but we can't hear you again. Can't hear you again. I think my mic just dropped back again. Back again. It keeps dropping in and out. If anyone can help me with this stuff, basically I have a MODO Air 9192/6 and a Rode NT1A microphone. But for some reason, when I use them on Zoom, it just doesn't work. It keeps dropping out. I presume the issues with drivers, but I don't know. It works perfectly fine with everything else. It's just when I'm on Zoom, it just keeps cutting out. So if anyone can assist, maybe knows a solution to it, uh, please tell me, because I bought this stuff specifically for things like this, but it's just not doing what it's meant to do. I do a recording of this anyway, so I'm gonna be reposting on YouTube, so it's fine. If you wanted to record, it's not necessary. I can post it on Zoom. So back to the asset, JPY doesn't really look very enticing because there's a lot of, if we look at right here, there's a lot of consolidation. It's only giving us 1 day between the 20th and the 21st. So for that reason, it's still long, but I don't want to really risk it. So if we look at all the assets that's been called out today, starting from Euro CAD, GBP USD, Euro AUD, EuroCAD we might have an opportunity with EuroCAD. GBP USD, not the safest. Euro AUD, we might have an opportunity. So anything Euro linked, we might have opportunity. JPY, I'll put that as a high risk at the moment, but Euro seems to be the best opportunity for us at the moment. So I'm going to take JPY out of that list as well, leaving us with Euro. So what we can do next is then look at all the Euro assets. So I'm just So if we look at all the Euro assets, and let me close all of this. Sampling Euro CHF all the way. We can then look out of the 7 pairs on the major and some of the minors. We might be able to find maybe 1 or 2 trades for the week. And we play our cards right, we'll be able to make decent amount of money from that. So July. So So we're looking from July the 19th to go long. So what we can see with Euro CHF from July 19th, there's nothing here. So it's telling us to go short and long and short. And basically Euro CHF is not part of the game. Next thing to look at is Euro JPY. And keep in mind, this game is about patience. You just have to have patience for the right trade. If you don't find any, just let them go that week. Do something else. So next thing is Euro JPY. Doesn't really look good until the 20th. You know, it's telling us long from 20th to 21st. Now, if you know me, I always like 3 days straight, but you can take Euro JPY. Now, this will be risk because I already said JPY looks risky anyway. You can go long from 20th to 21st. Yeah. It wouldn't be my best choice, but it's still giving that 2 days. I like to have them 3 days at least minimum. So if you're taking that, just keep a note. It's going to be high risk. And the next one to look at is Euro USD. Now, Euro USD doesn't even look good for Euro throughout. And keep in mind, if Euro has actually dropped below the USD for the first time in like maybe 20 some years. You know, so Euro is actually bleeding right now. So hopefully Euro kicks back in this week. Okay, so the next thing is Euro GBP. It's giving us that 19 to 20, but it doesn't give us that 21. So what we can do also, that will classify as a high risk. P long from to 20 risk. Okay, and next thing will be Euro CAD. Gives us that 19 to 20th as well, but 21st, it doesn't give us that high risk. Now, come Monday, you can actually see this start going up from Monday, but you should be patient. But if you can find it, this an entry on Monday, feel free. Basically, it's the same thing right here. Hey. Yeah, so, and then Euro AUD. This looks better. Gives us exactly the 3 days we're looking for. From first. So to 21st, risk with a medium. Because I haven't checked Williams, and so I classified as medium. Change that later. So Euro NZD will be the next in line. That also gives us 19th to 20th. So now we have 1, 2, 3, 4, 5. We have 5 assets to look into. Now, if we go to charts, trying to do the technical aspect of things, I'll start with Euro AUD first because it seems to be the lowest risk right now. See, I don't think I have that listed right here. Oh, here we go. So the Euro AUD is telling us to go long. So let me just quickly. Now, Williams is telling us that we should go short, and this is telling us to go long. Now, I don't really like it when Williams tells me to go short, because if the market is telling me to go long, but the Williams telling me to go short, I'm very, very skeptical about it. I would rather have Williams also posting and going in my same direction, giving me the low risk. But right now, it will still be classified as a medium risk. What I can do in this scenario is look like top-down approach and try to spot probable area of liquidity. So right here, see where the market bounced back right here. That's a little pocket of liquidity, which market, anytime it leaves the zone, it comes back to fill the zone. He's attempted to fill it in right here. It didn't really do much, and it came back again to fill it in again right here. This time it's done it again. And if you look at this on a lower time frame, like a daily time frame, you probably see a double bottom. Yeah, so right here, 1, 2, be a double bottom for it right there. So what we tend to do in this scenario is tend to see, I'm just trying to see where the trend line is going anyway. So it's bounced at 1, 2, and 3, 4 right there, but it's broken it off. So this trend line is no longer validated for me anyway. So what I try to do in this scenario is that since I know I'm going to be going in the market on the 19th, for example, which is in 2 days time, tomorrow will give me the chance to literally. No, Williams is not inbuilt into, no, it's not inbuilt into MT4, no. What I try to do is I would wait till Monday and probably see where, you know, price will react. Currently, not right now, if you look at it from the 4 hours, you can see there's a trend line set up right here, but price has touched this, and then this came, touched that and that, but it could easily breach that trend line. Well, the pocket of liquidity is somewhere down here. Now, this might sound very advanced to some people that, you know, that's never joined before, doesn't know what I'm talking about. Please bear in mind, it's just terms and all of that stuff. Basically, what you can do is on Tuesday, when the time comes and you know you're going long, for example, and you have a long indicator that tells you when to go into the market, you can just wait to when you get that long indication coming through and just follow that, you know, based on your own personal perception. You'll be perfectly okay, you know. But all of this and the technical aspect, the only thing you need to know is literally where your support and resistance is, and then try to see if you can get the right timing with the support and resistance. Like for example, in this, when I look at it on the daily chart, for example, the next candle is going to open somewhere around here. Depending on what happens, if the new candle opens and it goes above and breaches this, then most likely my entry is going to be somewhere around here, this zone right here, because what will happen is price will retest. Now, if it breaches and go further below, like below this, for example, I would wait and probably set a new, so I'll go on the lower time frame, for example, and wait for like price to go above, let's say the 50 and the 20 EMA, and get a buy entry to go long, you know. So what you don't want to do is have, okay, in this region or in this particular price right here, this is where I want to go into the market. Because when you have that, what tends to happen is price doesn't obey it all the time. Sometimes price breaks through and sometimes it doesn't. So you want to have a dynamic mindset with the market because it's actively changing. It's like human emotions, you know, it keeps changing over time. So what I would say with this is come back on Monday evening, come and check the market. If the market is above, the trend line, then you look for entry when price pulls back. Alternatively, if you want to be the safest, wait for price to go above the 50 and the 20 EMA, then go long. But the problem here is you only have 3 days of entry, so you might not have much to feed off on that move. Your next best option is to wait for price to go down. Now, there's something called an average, it's called ATR, and also there's something called the average week size. What I tend to do is if I wanted to go long, for example, on Monday, I'm going to calculate the previous 5 candles wick that goes long, like 1, 2, 3, 4, 5. And I add the wick numbers together and then divide it by 5. So let me see if I can find the indicator. Yeah, so I have the syndicator right here. Change that to 1. So for example, right now with this one, what I can tend to do is I'm gonna label the 5 candle. This is a little bit of maths just to help with the market. So this 1, 2, 3, 4, 5 candles, because they're the one pointing up, I'll do 6 plus 45 plus 20 plus 8 plus 98, right? That gives me 177, and I'm gonna divide that by 5, which gives me 35.4 pips, right? So until price open on Tuesday and pulls back 35.4 pips against where I want to go, I won't even look at the market. And you can easily just set an alert for that. So if you go here and click alert, so you can set that how many pips you want. So when Monday price is closed, just wait and then measure 35.4 pips and set an alert, for example. At that zone, you can pull it. And then when price hits that, your computer is going to make noise, and then you're going to come check it and then start analyzing the market and when you want to go in. If that doesn't happen, then you just don't need to even bother about it in the first place, about that trade. So that's one of the approach that I use in the market. I calculate the wick size, set the alarm, wait for the price to come, then I start analyzing. Because right now, what's happening from here is from the, let me delete. Let me delete this. What's happening right now? This ain't telling me much. All I can see is there's a double bottom right here. There's a pocket of liquidity right here. But in regards to entry, I do not know, because this is consolidating straight for almost a week plus. Yeah, I mean, if it's coming on Thursday, we're probably going to be in the market already at that time. So if we're in the market at that time, what would happen is when that interest rate news gets released, interest rate news doesn't really have an immediate impact on the market. You will see fluctuations, but the impacts are more on the long term rather than the short term. So it's what will happen over a period of time. So most likely what would happen with the interest rate is they would increase that figure. They will increase the interest rate, one, to be able to drag in more investors to the euro side, so boosting up the euro economy, and trying to what's it called, get more power behind the euro. But what that would cause also is it's gonna be tough on the people within the country, because currently right now people in Europe and people in the States, a lot of them are complaining in regards to inflation. Right, inflation is very high now. When inflation is very high, a lot of people are stressed out. Prices of everything is going up. Price of food is going up. Price of oil, gas, everything is going up. Housing prices is going up. So they will be very careful in the way they do the interest rate, because they have to do it very smartly. If they increase it too much, then it would even put more strain onto the economy for the people living there. And if they don't, there's a possibility that the euro will lose strength over time. So I'm more on the increase side. They want to put an increase to it. That's what I feel anyway. This is my personal opinion, because it will help prop up the economy a little bit, dragging a little bit more money in there. But then they will have to find small measures to put in place to help the small guys cope, their citizens cope with the higher interest rate. But let's see. I don't know. Let's those people that do what they do, let them decide. The economic expert decide on that. But it's a very valid point, Mr. Uzo. Beautiful point. Um, yeah, yeah. So next thing we can look at is we can look at EuroCAD, if that's on the list of assets that I have here. I normally segment the assets, the one I just want to focus on. So I'll go back to plain chart. No. Okay. So EuroCAD is already lifting. There's a bit kickback. You can see Euro had a massive drop, but seems to be kicking right now. So, and the entry is the 19th as well. So in 2 days, So what we can see maybe tomorrow, if price literally comes back, I don't expect price to go back below this region right here. So if I look at down the 4 hours, let's see what we can find. Okay, maybe not. That would be my first part, but I think price might actually want to come back here. So currently right now, price is trapped between the 20 and the 50 on the 4 hours. Nevertheless, we might see price pull all the way back down here because the market always has, beautiful ways of actually trying to get people that are already in the market, trying to get them out. So I presume they're most likely is going to be a raid somewhere down here. So I'll wait for Monday to come. The prayer is literally price drops below the 20 EMA on Monday, and then on Tuesday, maybe if price gets to this region, just a slight wick, then you can look to buy that and then exit this trade on Wednesday. And if that Tuesday comes, price goes back, kicks the 20, ideally exit the price at the 50 EMA right there from the 4 hours. It doesn't seem like much, but something you can cope with. Price might actually get to 20 EMA on a daily, but I'm not sure. So, but one thing is on the 4 hours, the William looks good. On the daily, it doesn't really look that good. So on a daily, we might see price pull down a little bit, then kick back up. And yeah, that should give, if price comes here to where it is right now, about 130 pips should be sufficient, on that trade. Is there any questions so far? I'm just gonna look at one more. Let me pick your. Let's look at your NZD. So Euro NZD, the same thing. With the Euro NZD, I'm not actually gonna even touch this because it looks like it's been consolidated, just like the first one's consolidated as well. But ideally, what you want is price will literally bounce all the way back to 200 right here. 220 and 50, where they're all at right now. Price will probably most likely bounce back to this region. And we pegged that entry for 19 to 20, so 2 days. So what's most likely going to happen is tomorrow on this asset, price will come down somewhere around here, kick, but that hopefully opens up both, or maybe below. I don't really care, whichever one it does. Kick back. Yeah, roughly about 150 pips if price comes all the way down here and goes all the way back up there. So, guys, practically that's what I have for you. All the assets from the ones you've called anyway is based around Euro right here. So now keep in mind, you have to take all this information with a pinch of salt. I recommend everyone do their own personal analysis. I'm not saying I'm the one that know the entire stuff about the market. I only know what I know, and I'm sharing with you guys what I know. That's helped me so far. So those are the information I have for you. I don't have qualifications in regards to this, but I know a little bit. So those are the trades that I have for you guys this week. Take everything with a pinch of salt and do your own research. And I wish you guys the best of luck in trading, this week. Hopefully you make some really good amount of money this week. And even if you make, 1,500, 400, 10,000, whatever you make, man, just get satisfied with it. Don't rush it. Think about your gains in regards to percentages, not in regards to monetary value. So if you have let's say you have example, $1,000 account or £1,000 account, for example, and you make let's say you make 10 pounds. 10 pounds out of that should be about 1%. If you made that in the space of a day or a week, no bank is going to give you 1% in 1 week. So think about it that way. And if you make 100, that's 10%. No bank is going to give you that. But when you have 1,000, you make 10, be like, oh man, this is very small. It's because you're looking at it in terms of pricing. If you had 1 million, for example, and you made 1% of a million, that's 10,000. So think about it that way, you know. Always think about it that way. Don't think about it in terms of the money. Think about it in terms of percentages, and you should be perfectly fine. So on that note, I want to say thank you guys for attending today, and I'm gonna catch you guys on the next one. So if you have any questions, just shoot me a message on Telegram. I know I'm not active as much in Telegram. I have so many things running simultaneously, so I try to keep up. But if you need the tools, they're on the website, www.business.damempire.co.uk. I'll post that. I think there's a bot that posts that for me anyway every time on Telegram. So if you need it, just grab it from the bot post. And if you want to message me directly, feel free to message me on Telegram. I'll be there to answer you. All right, guys, take care and have a wonderful weekend. Bye.